Hello, and welcome to this week's Profit Maximizing Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do that with our profit coaching programs and our tax planning systems, which has saved my clients well over millions of dollars. I'm not even tracking anymore. I love my clients, but I don't want to share a jail cell with them. Today alone, we've met with two people, and the savings was over 150,000. I'm sure I can't even remember off the top of my head. Um, Support for today's show is brought to you by Profit Maximizing Publishing, which published my book, The 90-Day Profit Reset, which helps you gain your independence from reduced cash flow. What's that say? Shrinking margins and evaporating customer base. Look, this is a great book for helping you save money. I mean, I know I wrote it, so I'm tooting my own horn, but there's a lot of good stuff in it. Don't forget to look at the appendix. Got a lot of my coaching checklist that I use. 17 steps to improving cash conversion is one. We're going to be talking about that today. 82 tricks to find and keep cash hiding in your business. So there's a lot. That's just two out of 6 or 7 that are really filled with a lot of things. So you can pick it up on, I think it's still on Kindle for $4.95. A hardback is nothing. And if you're in the El Paso area, just stop by. I'll give you one. you know, you don't even need to spend any money. Because really what I was trying, sorry, let me put this away. Hey, go Bruins. I grew up in Springfield area, so I am big base Red Sox and Bruins fan. Weirdly, I'm not a Patriot fan, but whatever. Anyways, look, today we're going to be talking about mastering your cash conversion cycle, which really is a little known thing that really helps you, keep more cash in your bank account. And it's a little bit long, but I'm going to cut it down. But understand, in every business, cash is king. You're going to go out of business if you don't have it. As simple as that. You can show profit on your balance sheet, but if you run out of cash, boom, on your balance sheet, on your income statement. But if you're out of cash, you're in serious trouble. We all know that. But the truth is, few business owners actually manage their cash. As simple as that. Business owners usually enjoy producing and selling their products, but they often feel that managing cash is the bookkeeper's job. All right. Big problem with that is if you run out of cash, you're pretty much out of business. Like I said, your employees expect to get paid every week, 2 weeks, whatever. Your landlord wants to collect their rent, payroll taxes are due. The list goes on and on and on. I always joke that a business owner brings in a bunch of cash with his left hand, pays out a bunch of cash with his right hand, holds some pennies fall that he gets to keep. And we try to change that, but that's not far from the truth. So when a business owner starts to run low on cash, they quickly have to figure out how to get more. That usually means collecting their receivables, which is often the biggest. I met with somebody today, $111,000 in past 90 days of receivables. It's been a while since he looked at it. I've been guilty of that too. We get so busy working, we forget to do it. There's ways to automate it. QuickBooks now, desktop in particular, has the ability to send out statements whenever you want to automatically. Investing some personal money, running up credit cards, asking for loans. Once the cash balance is back to normal, everything in the business is back as usual, at least until the next cash shortage. Best way to solve cash flow programs once and for all is to speed up the complete sales to cash process. So what is that? All right. You start off, you advertise your product or service, your customer places a service, the staff turns out your product. Now, obviously, if you're retail, it's a little bit different, but not much different. All right. The product is delivered or they pick it up. The invoice is sent. You collect the invoice. The staff is paid. Your vendors are paid. That's great if it works that way. And cash remaining is called cash flow. That's the small amount of your collection that actually finds its way into your bank account. That's how it should work in a perfect world. You collect the invoice before you have to pay your staff and vendors. Anybody in business knows that's not really how it works. We don't live in a perfect world, all right? We often have to pay our staff, our vendors, and our overhead before we have a chance to collect it. And it gets worse. Every business owner has a certain amount of fixed expenses, rent, loan payments, taxes, insurance, utilities that have to be paid out monthly, no matter when and if cash is collected. Accountants and bankers refer to these as overhead costs. I joke that, and it's a bad joke, that these are overhead because they're constantly hanging over your head, demanding that you participate in a never-ending hunt for cash. Okay, so why is improving the cash sales to cash cycle so critical to a business? Reason so few business owners improve their business cycles because it's really hard work. You have to look at each individual step and find ways to improve them, but the payoff can be big. Amazon is a great example of a company that's perfected it. Think about their business model. Everybody pays up front with a credit card, all right, which Amazon will even keep on file for you just to make it easy. This allows customers to place an order in one step. There's several regional warehouses making it easy to ship the product as soon as the next day. This fine tuning of their system has allowed Amazon to literally dominate the retail world and other worlds now and easily compete with many brick and mortar stores. So, how will speeding up the sales product improve your cash flow? Let me give you two examples. Let's take company A. If I buy from them, they place the order today, it's delivered next week. I get an invoice at the end of the month and I pay 45 to 60 days later. That means I could literally have it 75, 45 to 90 days before they get paid. Or I can be company B. I place the order today, pay for it today, or at least leave some down payment, and it ships tomorrow. The invoice accompanies the order, and I pay the remaining balance, if any, in the same 45 to 60 days. Company A receives the cash 90 to 100 days after the sale is made. They have to maintain a large cash reserve to finance both their work in process and their receivables. Company B has purposely designed their sales to cash cycles so they receive at least half of their sales price before the product is delivered. This one change dramatically increases their cash balance and allows them to make more sales without worrying about running out of cash. But that won't work in my industry. I hear that all the time. And truthfully, until recently, not recently, until maybe 10, 15 years ago, I believed the same thing. I assumed I had to follow the traditional business design of most CPA firms, which run like company A above. They bill when the work is completed and wait to collect their receivables. This leads to a constant struggle to collect enough cash to cover payroll and overhead. A few years back, I decided to make a few changes. We started requiring monthly billing for a lot of our clients via credit card or bank, and we're doing more of that now. Okay. I used to have a big problem collecting on tax work. If I let my client take the tax return without payment, I was paid much later, if at all, because there was no paying. Now we just don't do that. I get paid whenever they feel like paying me, but we're not doing that. We're basically saying, you're not going to get the tax return until we get paid. Now we'll make payment arrangements with them, but I have a big advantage. The IRS has a deadline that they know they need to get it done. We explain our new policy to every client at the beginning of the process so there's no misunderstanding. And I went a step further and said, what if I got paid in advance? Yes, this is almost unheard of in the tax business, which in many ways is just a commodity business. First told myself no one else was doing it, and I found a CPA up in Oregon that was getting prepaid on a lot of work. So I put together a system to give my clients an upfront discount for paying me monthly. I then offset this discount by upselling an audit protection program. The result, my net income is basically the same, but I get paid in advance. All new clients are required to put a 50% down payment. They don't have a relationship with us, and we don't know how promptly they will pay. This helps weed out the deadbeats. Sorry. If they want to pay us now, if they won't pay us now, they're probably not going to pay us later. So heck with it. For business clients, we've got a variety of packages combining tax preparation, year-end financials, tax planning, QuickBooks support, sales, and profit consulting. We design them to provide what the client really needs: more sales, more profits, more cash in the bank, and less taxes paid. All right. While getting what we really wanted, which was better monthly income. This allows us to increase our average sales per client above the industry average. Key cash building tip: don't assume that just because all your competitors are doing it one way, that you have to do it the same way. Listen to that again. Just because everybody else in your industry is doing it doesn't mean you have to do it that way. Don't be afraid to look at how you're treating your customers and how you're getting paid, and then look for ways to get paid at the time of the sale or even before the sale. One of the key components of speeding up the sales to cash cycle is to just eliminate receivables as much as you can. All right. Look, there's a reason I said get the book. I'm talking as I turn away from the microphone. I have a whole section in here on the cash to conversion cycle, and I got resources in there, but let me see if I can find it. Yeah, 17 steps to, it's appendix 1. I mean, that's how important I thought it was. 17 steps to improving your cash conversion cycle. And it's also a chapter where I go over it. It's so important. I didn't put a lot of things in here, but starting on page 17, I don't think that's where I did it. reinvigorating your cash flow. So I got a whole chapter on just it's actually chapter 1. All right, that's how important it is. You need to keep your cash. So it talks about how to cut costs. It's not collect receivables, don't discount, the effect of raising your prices. A lot of things there. I'm looking for the one in particular. I don't think I spent a lot of time on it. Advanced payments, increasing cash, and how to do that. Controlling your inventory, making sure you got good employees, reducing taxes. I mean, it doesn't do any good to turn it over. And then on page 44, I talk about the cash conversion cycle and how to improve it. Do that for a few pages. But I also have done a blog post on it. So if you go to go to wjb-cpa.com. Matter of fact, if you do that and go straight to it, you'll see a blog, and you can easily search in there and you'll see I've covered this topic a few times. Everything on cash flow, because cash is king. Hey, this is Wayne Blau saying until next time, let's make this our most profitable year ever. And hey, we're in December already. I'm in the middle of tax planning season. If you're not paying attention to tax planning, look at last week's video. Kind of watch that, do some search on the blog, find some of the ones I did, go to YouTube channel, see what I did last year, try to do some tax planning yourself. Best yet, see if you can find somebody locally that's doing it. If they're doing tax planning, you know, because they're swamped right now. If a CPA is not swamped right now, they're not doing tax planning. Simple as that. Until next time, first of all, it's December. Start enjoying your Christmas time. Get ready. And let's, like I said, make this our most profitable year ever. Thank you very much and have a